is live right now. Time for the word on Wall Street. Top investors watching your money this morning. Joining me, CFRA Chief Investment Strategist Sam Stovall, Bulltick Capital Markets Chief Strategist Catherine Rooney Vera, and Michael Lee Strategy Founder Michael Lee. Welcome, one and all three of you. So great to see you this Monday. Sam, let me start. Let's talk about some Twitter. The company, the board, adopting a poison pill over the weekend. This is just a legal maneuver to restrict Elon Musk from accumulating more than 15% of shares. This is following Elon Musk's $43 billion bid to acquire the company. This is a strong defense to Elon Musk's takeover. Your reaction? Do you expect, there are the reports that Thoma Bravo, the private equity firm, could step up as a suitor for the company, or even other private equity firms are doing the math on this, certainly?
Yeah, well, I'd say after Elon's sale of Tesla stock last fall to pay taxes to silence his critics, he's probably sitting on more cash than anyone else in the world. He is the world's richest man. What I would say here is I do think Elon's going to walk away with this company. Twitter, as a public social media company, has been horrifically run. I think on Thursday, when the market closed, it was 15 or 20 cents above where it closed at its IPO date in 2013. So the NASDAQ in the same time frame was up several multiples. So this has been horrifically run. And the name of the game in social media is you need a lot of users, not millions, not 10 million, tens of millions, and then you monetize that. Somehow Twitter has been unable to do that, and you need to reorganize yourself. The best way to do that is through going private. I think this poison pill is a negotiating tactic. I think Elon's going to have to raise his offer a couple times. I personally think it gets taken out at 69. First reason being, like, Elon's still a 15-year-old boy, and the second reason is Twitter's high watermark is mid-70s. I don't think they're going to get the high watermark. I don't think Elon's going to get mid-50s, but it's pretty hard for a board that has no real ownership in the company. Mm-hmm. All the other major stockholders, with the exception of Morgan Stanley Investment Management, are passive ETF shops. Right. Will either pass those votes on to the underlying ETF holders or use institutional shareholders' services to figure out what to do on a proxy basis. So I think this deal happens. And if you take the politics aside, it makes a ton of sense for Twitter shareholders and for Twitter as a company to figure out how to actually make some money and profit off the company they built. So, and then when you add the politics of the situation, I mean, look, you have the SEC, Justice Department, and the National Transportation Safety Board all, surprisingly open up investigations the day after this. I don't think it's going to work. Elon's got the best bankers, the best lawyers. I think he's got enough money for a down payment. I think there was a report that either Larry Ellison could come in with Thoma Bravo to partner with him, but also you could lever against Twitter's cash flow and his Tesla stock. So I think this deal ends up getting done. I think it gets done higher than here, and I think it's the best course for the shareholders and for the company going forward.
Outstanding analysis, Michael Lee. It's just outrageous that this board clearly enjoys the stench that they've created in losing money year after year, and that they take this. Maybe they get, as you pointed out, this company goes to Musk for a higher bid, but it's just disgusting to watch what this board of directors has done in terms of their poor management, and they'd rather be a money-losing little censorship fiefdom than actually just naturally come to the table with Elon Musk. It scratches my head. I scratch my head. Catherine, the 10-year nearing 2.9%.